You can only fight the way you practice. Miyamoto Musashi. That is why we practice trade using our trade worksheet, acting like all of our practice trades are as real trades. And if you don't practice as you're going to actually trade, then of course you are wasting your time. And if you are starting off trying to use real money, you are making a big error, because that money will soon be gone. And not only will that happen, but you will destroy your self-confidence. It's the worst thing that you can do. So please don't do that. Now let's jump into the markets. It's a down day for everything. Gold down the most for the day. But as we look at stocks, we see that it is an up week. We hit a higher high throughout the course of the week. Price percent oscillator is up. The derivative oscillator is up. Price percent oscillator is just about flat on the S&P 500. Again, price is above the weekly trend line, and we'll look at the 2-day because it's really trying to move below that. We go from the weekly to the 2-day. Now, the thing to remember about this 2-day is on the 2-day chart, it has passed through. This is the first day of the latest 2-day candle, but it has passed through the 2-day trend line. When you see what we saw on the weekly, that's what that means as you get to the smaller chart. Price percent oscillator is heading down, derivative oscillators losing upward momentum. So again, things have been sliding sideways for the last 3 days after peaking back on the 16th. We go to the 4-hour chart, and of course we had 2 days of strong down movement. That was on Tuesday the 16th, Wednesday the 17th, and then on the 18th things tried to slammed down in the morning on Thursday, and then we had that green spinning top on Friday, bumped up in the morning, and then peeled off in the afternoon. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. So again, we'll just continue to keep our eye on things. Don't have that final warning, the final 2 warning bells going off when we start seeing penetrations of the weekly chart, and of course, well, we'd have to see the 2-day and the weekly move over going down. So keep your powder dry, pay attention. Things are still in a move that if the chart does turn around and start hammering up on that 4-hour chart, we could jump into it over the course of the next week. And folks, it's the summertime trading zone. Having lunch today with a friend of mine, one of my favorite traders, and he was talking about how as he gets older, he's just not sure if he's even going to trade over the course of the next summer. I said, well, the summertime trading zone is the most challenging time, but it can keep you the sharpest. And when it works, it works. The trick, of course, is to be liquid. What do we see going on the Qs? The Nasdaq 100 down 0.73%, as opposed to the S&P down 0.56%. We see the price percent oscillator is about flat. Derivative oscillator gaining upward momentum. Prices did hit a higher high, and the candle is higher. We saw that on the S&P also. We go to the first day of the latest 2-day candle, and we see it has not penetrated the 2-day trend line. We did have basically 2 dojis over the last 3 days. Full 2-day candle in this latest one. Price percent oscillators heading down 2. Derivative oscillators losing momentum after things peaked back on Thursday afternoon. Back on Thursday of Tuesday of this week, forgive me. And we will continue to watch and see how much weaker this 2-day chart will get. Let's check out that 4-hour chart. I was trying to jump there too soon. It rotated over back on Tuesday. And down Tuesday, down Wednesday, and then, of course, hammered down Thursday morning, spinning top in the afternoon, up in the morning, and then everything rolled over in the afternoon. So again, things are still, the Qs is a little more primed than the S&P 500. If there is a crossover going up before that 2-day chart crosses over going down on this 4-hour chart, you would have a potential for a jumping in point. Keep your eye on things. That could happen. If it does, great. If it doesn't, that's fine too. Practice, practice, practice. Remember what Miyamoto Musashi said to us. You can only fight the way you practice. So practice hard, practice for real. Keep a good record of it using your trade worksheet that's available in your show notes. If you do that, what you will find is you will develop your own trader's almanac. You'll have all the best things you've learned there in black and white for you to go back to repeatedly. Look over your successful trades in your notes and figure out why things worked and why they didn't. You will pick up those little things that make all the difference in the world. Okay, going now away from stocks to bonds. Bonds, of course, another down week for bonds. Hasn't crossed over, going down. Price percent oscillator heading down. Derivative oscillator losing upward momentum. Things are still positive, though. Haven't crossed over yet. Now, as we look at the 2-day chart, of course, it crossed over back on the 8th of July. Down for 8 days, and then for the last 3 days up. Was a down day, but our Heikin-Ashi candlestick is showing us the average pace is trying to move up. We go from the 2-day to the 4-hour. What do we see going on there? As things bottomed out all the way back on last Friday, the 12th of July, sideways and up for a while, and then starting to move up. We're just going to have to let bonds sort themselves out. That is not happening easily. And again, we'll just wait and see what there is to see. They will lead us in the direction of the next weekly vertical crossover. Again, I'm thinking that's probably going to be down, but if the 2-day corrects and things start moving up and the weekly is still in that one going all the way back to October, then of course we'll look to ride that again. So leaving bonds, going to gold. Now gold pulled back on us, 1.46%. It was down actually more for the day. We look at our candlestick, and of course we see that things are still moving up even with the prior week's trend line. Price is just above that. Derivative oscillators lost a little bit of energy, but that price percent oscillator still heading up, my friends. What does the 2-day show us? 2-day had been getting stronger, now getting weaker. Derivative oscillator gaining downward momentum. Price percent oscillators heading down. First day of this latest 2-day candle is a green up candle, but not peaking as high as the prior. The body is higher, but the peak on the wick is not higher. So we'll continue to watch things on Monday very, very cautiously. 4-hour chart, what do we see there? After things bounded up in the afternoon on Wednesday, we saw a red spinning top in the morning, down candle in the afternoon, not going as low as the prior up candle on Thursday afternoon. Hasn't crossed over, going down even on that 4-hour chart. Derivative oscillators lost some momentum. Price percent oscillator is heading down. So watch things as Monday appears. And let's see, I'm sure those naked shorts in New York are working very hard. Every time gold goes up, there's news, interesting news, isn't it, that comes out that tries to bang it down. There are lots of forces that don't want gold to go up for many, many reasons. We'll just watch our charts. Folks, if you want to support us, you can do so by buying our book. You'll see a link in the show notes. If you're not subscribing to our channel, you need to do so, because every day we have a great training there at the channel just for you. And we want you to receive it. And the only way you're going to get that is to be a subscriber, and subscribing is free. Training today is our first training on trend lines. It's a 2-part series. Going to be sending that out in the show notes today. If you've not signed up, go to chartingwealth.com, put in your name, email address. We don't spam that list. We don't share it with anyone, just with you. My friends, you can purchase the book, link in the show notes. You want to be a Patreon supporter, we sure appreciate that. Hope you all have a great weekend. Looking forward to this next week. And folks, don't fret. The fall-winter trading zone is on the way when it gets beautiful. God bless. All the best from the whole team here at Charting Wealth World Headquarters.